Hey guys, good morning, and you're welcome to today's commentary for the dollar and foreign currency. If you are on this live call, I'd like you guys to just engage the comment section with your name and where you're watching me from. I'd like to know where you're watching me from, so feel free to type your name and where you're watching me from. And if you have a question about any of my video commentary, any of my teaching or lesson, and you'd like me to bring clarity, please feel free to drop those questions in the comment section. I'll be able to go through them before the end of this session. We're not going to be spending a lot of time on this session. However, I'm sure it's going to be an awesome time. All right, so today is Monday, 16th of February 2026, and this is my commentary for the dollar index, foreign currency, and commodities asset. Okay, Shem from Adamawa State, thank you so much for joining me today. All right, so as my usual culture is, I would like to start top-down analysis by simply looking at the economic calendar of events on forexfactory.com. Specifically, I'm trying to find if we have underlying high or medium impact news events that may unfold during the week and has the tendency to induce speedy price delivery, and the absence of that high or medium impact news event will mean that we're going to have a very quiet trading day or trading week. And today being Monday, you can see we have bank holiday on the dollar index, on the dollar rather, bank holiday on the dollar and the Canadian dollar. And if you look at the entire calendar for today, 16th February, we do not have any medium or high impact news. The orange box usually signify the medium impact, and the red boxes signify high impact expectation. So the absence of high or medium will signify, a very low volatility trading day. We only have low impact, all the yellow boxes, and then bank holiday. So the dollar will most likely, stay in a consolidation throughout the day until the next day tomorrow, which is Tuesday 17th. So you can see we have medium impact on the dollar. So you go through all the calendar and you try to identify days where there would be CPI, FOMC, and the NFP. You don't want to be in the market during those type of news events. Okay, last Friday we had CPI news, and I remember one of my students who had traded, she had made money earlier that Friday. I think it was Thursday or Friday. She took a trade on GPJPY and she made some cool money on that asset, but she still went back to take a trade, and the CPI showed her the reason why I always emphasize that try to stay on the sidelines during those high or medium impact news events. This candle here, you can see these two candles created what we call seek and destroy patterns, taking out the highs and taking out the lows, and so even if you were buying, this will have taken you out, and if you were selling, this will have taken you out as well. That was exactly what happened. So that's why we say avoid trading this type of news event, because it doesn't worth your time and it's going to put you in an emotional roller coaster that you do not want to be in as a trader. So once you are done with the economic calendar and you've taken note of the day, the time, the currency asset, and the type of impact expected during the week, you go down to the trading view dollar index chart, and you want to know what is the directional bias for this asset that I want to trade. Many traders fail because they are unable to identify directional bias. They are unable to identify, the order flow. What is the true narrative behind what price is doing and why price is doing it? Okay, because at the bigger picture, you get to discover that the narrative is always bigger than just market structure. And market structure would only make sense if you are in line with the order flow. Like I always tell the mentorship students, I used to say that you don't just focus on market structure. Market structure will only make sense when it is traded in the direction of the monthly or weekly time frame order flow. Okay, so to determine the order flow, you need to study the monthly time frame, then you refine down to the weekly time frame and the daily time frame. These are the three time frames that tells you clearly what the directional bias looks like. Okay, and looking at this current case study for the dollar, we can all agree that the dollar is currently bearish, especially because the dollar had traded into that bearish breaker, and we've seen in the last 3 months the dollar has shown consistency in taking out lows and respecting highs. And this month we're still expecting that this guy is gonna still trade bearish because our current order flow is bearish. So we want to see the dollar trade into the next strong liquidity, the sell side liquidity pool residing below that old low there, the old low there, the mitigation block, and the fair value gap residing below all these lows that we have outlined. That is how to know where the drawn liquidity is actually residing. Then you go to the weekly time frame, and on the weekly time frame, you're trying to study the 4 elements of a trade setup. You want to see price behavior in line with the order flow. You want to see price always create expansions in the direction of order flow and retracement into internal ranges of fair value or order blocks. And clearly you can see this guy, after taking out the sell side liquidity pool above that high and reacting on the bearish breaker by the left there, this guy rallied lower. It traded lower, creating that bearish expansion and retraced into the bearish order block there, created another bearish expansion, took out the external range low here, and has repriced into the internal range bearish order block here. All right, so we still have faith that this guy is going to trade into the next sell side liquidity pool, that old low and that old low there. This current week we've seen the dollar open, and of course, as my usual culture is, I'd like to see the current week trade above the close of the previous weekly price action, that candle there, and we're actually trading above that closing price of the previous weekly candle. So we'll be looking for daily time frame market structure that supports the idea of going short. And clearly you can see market structure has been bearish. Price has been creating lower low, lower high, lower low, of course lower high. Price traded into that previous support turned resistance, that breaker block that is in a premium. When you measure Fibonacci levels from the high to the low, we're actually above 50%, specifically at 62% of that price range. So we created that expansion lower again, indicating willingness to continue lower, and price has created a fair value gap right there. You can see that fair value gap right there. The fair value gap right there, price has tapped into it, and so you want to see this guy, go short this week. This today's price action, price open and has tapped into that fair value gap again. So I want to see price sell off from that level. We'll look for 1 hour time frame trade setup. This is the stage where you are looking to get your entry setup on the lower time frame, like the 1 hour time frame, and you're shorting into the next sell side liquidity pool. And on the 1 hour time frame, what we have here is, we've seen price action take out the external range high here on Friday and created a rejection block right there. So price tapped into that rejection block and sold off. Price sold off. Okay, price actually sold off. So, and also we've seen this guy again today. Price consolidated. So today being Monday and being bank holiday, it's still consolidating. Otherwise, if I see a setup, I would like to go short on the dollar. So I have 3 things in mind. The first setup I'm looking at from this 1 hour time frame is the reclaimed bearish order block. You can see these 2 buy candles that were traded through by a sell candle there. That's a bearish order block right there. I'm talking about this guy. Okay, that is a bearish order block, but however, you can see price traded above that bearish order block and traded into a rejection block, and we traded below it. And we've been reacting off at that reclaimed bearish order block. We've been acting off at that reclaimed bearish. So what will I be looking for? I'll be looking to see price upon trading into that point of interest. I might be taking short positions right there and stop loss above the high. Okay, and I'll be targeting that relative equal low there as my first take profit on this guy, and ultimately the sell side liquidity pool that we have outlined right there for the dollar. So as we're shorting the dollar, we're looking to go long on euro and the GBP USD. Okay, so that's one way to look at this. As prices trading into the reclaimed bearish order block, you can as well look for 5 or 15 minute shift on market structure around this area for more confirmations to go short. Another idea is price might still want to retest the rejection block there. If it confluences with time and price, 2 to 10 a.m. New York Standard Time, I'll be taking shots right there on my stop loss above the rejection. Alternatively, we have that intra-week high there and the fair value gap residing above it. Price may want to trade into that level or even a little above it. That's what do you call it, that low resistance liquidity level there. Price may want to sweep that and give us an entry within the internal range fair value gap here to go short on the dollar, which I really don't think it's gonna be happening, at least not today. Probably tomorrow we might see a clearer picture of where the dollar is going. Okay, so this is what I'm looking at currently on the dollar, and until the dollar is actually ready with a trade setup, I'm not going to be trying to take a trade on the Euro USD or GBP USD. You're going to lose money if you ignore the reading of the dollar, because the dollar is the main driver, the dollar is king, the dollar is the main leader. Until the dollar says I'm ready to buy or I'm ready to short, I don't have a business trying to execute on Euro or GBP USD. Okay, then we can briefly look at gold here. Gold has been actually awesome. It's been awesome. Gold has been awesome. No, I don't think this gold price action is accurate. Okay, so I wanted to take a look at gold. Just give me a second. I need to check something. So gold is also bullish at the moment. This guy is very bullish. You can clearly see what price has been doing. On the monthly time frame, gold is bullish. On the weekly time frame, so if it's bullish, where is it trading to? Sell side liquidity pool there. On the weekly time frame, gold is also bullish. You can see price traded into that internal range bullish order block and has been showing willingness to continue higher into the drawn liquidity that buy side liquidity pool there. All right, so this guy has been reacting off bullish order blocks because in a bullish order flow, bullish order blocks will support higher pricing. So price traded into this, rallied, created another one, we tap into it, and we need to rally. So this current price action for today, price open and traded below the close of the previous daily candle, which is the Friday candle. So within that price range, we may see an entry signature on the 1 hour to buy gold into the drawn liquidity. So you can see gold had traded into that bullish order block on the 1 hour time frame. Price action traded, created shifting market structure right here and created the bullish order block. So we tapped into it and created another expansion, and then again price has just tapped into this bullish order block also on the 1 hour time frame. So gold is bullish. Just look to get your entries correct on gold. Order flow for gold is bullish. Order flow for gold is bullish. All right, so you may want to wait to see price create some retracement into the order block or create subsequent fair value gap. You can reposition your entry since you must have missed either this entry or as price takes out the high of the third candle here. You probably have missed an entry there with stop loss below the low of the third candle, that third candle there. So if you missed that, you should wait to see price probably retrace into that internal range, inverted fair value gap right there. You see that right there. So you want to see price trade into that level before it rallies into the next strong liquidity, and it's going to be that high there and the ultimate highs that we have residing above. So my friends, this is my thoughts for the dollar, foreign currency, and gold. Please, if you have any question, feel free to engage me in the comment section, ask your questions, and make sure that you join my free Telegram community. If you want to get serious this year, you want to see updates about my mentorship program. In fact, yesterday, I gave out a discount offer for people who wanted to join my private one-on-one mentorship. I gave out a discount yesterday. So if you are still on this live call and you want to be in my private mentorship program, it's nothing compared to what you have seen, and it's the most transforming mentorship that you're ever going to need this year. You should find a way to be in the mentorship, or you could as well join the 90 days smart money program. Just check the link on the description of this video and get started with me and stop losing money this year. All right, so I'm still looking at the comments for your questions. Then also, please, I have a recommendation for broker. I mean, a lot of you have asked me questions. Please, what broker can I use? Check the link on the description of the video. There's a link for my recommended broker for trading this year. Please sign up with them and see how your trading gets this year. They have very, very fast withdrawals, fast deposit, excellent execution, and I think that's a great deal for you as a trader. Okay? So if you do not have any question, I think we are good for today. Until next time, I wish you good luck, good trading, stay safe.